Alright, y'all. Are you new to Market Cipher? Are you new to trading? Do you want to win every single trade you enter? You've come to the right video. Alright, now I was kind of joking, but I'm actually not really joking. This video is going to be the definitive guide to my 4-hour, 24-minute strategy, which I have been using and many other people have been using to win essentially every single trade that they enter. And I know that sounds fantastic, but if you take this strategy that I'm about to lay out for you and go and backtest it, you will see for yourself that it is on the money. So, the reason I'm making this video, this is actually a follow-up video. I made a video a few weeks ago outlining this strategy, and in hindsight I realized that I didn't do a good job communicating clearly the things that you need to look for before you enter a trade, and I'm getting so many questions, and they're all the same questions. People are asking, do I wait for this? Do I look for that? What about the money flow? So what I'm going to do in this video is I'm going to break it down as clearly as I possibly can, and I'm just going to give you guys some things that you can write down so you can have a little list of rules for yourself while you're trading so that you don't end up in bad trades and so that you end up in the best trades possible, because we're all in this for the same reason, right? Which is to make money. So we are going to be trading on two time frames, the 4-hour time frame and the 24-minute time frame. If you don't know how to get the 24-minute time frame, here's what you're going to do. In TradingView, right here where the different time frames are, you're going to pull this drop down menu, and way at the bottom you get to add custom time frames. You can do custom minutes, months, weeks, days, whatever. You're going to put in 24 and then click the add button right here. Oops. You're going to click the add button right here. If you star these, right, if I star the 24-minute, it will add it in a little button somewhere up here. I'm pretty sure. Actually, I don't see it now. But let's see. Yeah. Yep, see? If you star a time frame, it'll put it up here so that you can easily switch between time frames. So if I star the 4-hour and I star the 24, now they're right up here. I don't have to pull the drop down. I can just click between the two. And we are going to be using two indicators for this trading strategy. We are going to be using Market Cipher. This is the most important indicator, Market Cipher. And we are going to be using an indicator called Wolfpack ID. Wolfpack ID. You can just search for this in TradingView. It is a free indicator. These are the two indicators that we're going to be using. We're also going to be using Market Cipher A a little bit. I'll get into that more. So here's the outline for the video. Basically, I'm going to tell you guys the 5 confirmations we need to look for before we enter a trade. And then I'm going to talk about stop losses. I'm going to talk about take profits. And I'm going to answer some questions that a lot of people have been asking me, okay? So, if you want to start trading with this strategy, the first thing you are going to do is you are going to identify your environment. And the reason we're trading with two time frames is because we have an environmental time frame and an execution time frame. CryptoFace always talks about identifying your environment. If you're going to be entering a trade, you need to know what's happening on the macro scale and on the smaller scale. I find that the 4-hour chart is great for identifying your environment because it's big enough to let you know what's happening like on the daily time frame, and it's small enough to let you know what's happening on maybe the hourly time frame. It gives you a great middle of the road picture of the markets so that you can assess what's happening, and it will really help you make a plan to know, should I enter a long trade or should I enter a short trade? So we look at the 4-hour time frame to identify our environment, and the first place our eyes need to go is to this money flow right here. If money flow is thick in the green, if it's in the green at all, this means that we should be looking to long, okay? This means we should be looking primarily to long. If money flow is in the red, it means we should be looking to short primarily, but also, I'm going to get into this later, just because the money flow is in the red doesn't mean we cannot long, and just because the money flow is in the blue doesn't mean we cannot short using this strategy. It only means that if we're going to enter a long or short for long term, like if I want to enter a long position and hold it for a week, I would never do that when the money flow is in the red. I would only ever do that when the money flow is in the green. And the same goes for a short as well. However, it's important to keep in mind, if we're in a bull market like this, it's never a good idea to enter a long-term short, because if you end up with your shorts around your ankles, everyone's going to laugh at you, right? Because you're in a room full of people and your pants are down. Now, once we identify our environment, let's say we have identified our environment that we are in the green right here. We're gonna talk about let's say February 5th. We've looked at our 4-hour time frame. The money flow is in the green, so we tell ourselves, okay, I'm going to be looking to enter a long position because the money flow is in the green. Now that we've identified our environment, we are going to look for 5 confirmations. We are going to look for a 4-hour trigger wave, a 4-hour Wolfpack crossover, a 24-minute anchor wave and trigger wave, a 24-minute Wolfpack ID, and a 24-minute money flow cross. Now, I know this seems like a lot, but if you follow these steps, you will get into those good trades. So first, let's define these things. What is a 4-hour trigger wave? A 4-hour trigger wave is any green dot that prints on the 4-hour time frame where it is printing a higher low in general than the last wave that printed. Now, whenever we see something like this, where money flow is in the red, and we print a big green dot down here, this is considered an anchor wave, right? It forms below this -60 line. And then every wave that prints after this initial anchor wave is called a trigger wave. The way you can identify it as a trigger wave is because it's printing a higher low, and you can take a trend line and draw a line that connects these together. Now, I want you guys to notice that if we take this trend line and drag it all the way through to up here, in general, all of these green dots that print are moving higher and higher and higher and higher above the zero line. It doesn't have to be perfect every single time. We're looking for the general direction. When we're looking at anchors and triggers, we're looking for the general direction of Market Cipher B on the 4-hour. Because we can take Market Cipher B, let me remove these drawings here. We can take Market Cipher B and kind of draw on it like this. This is what CryptoFace does, right? He draws on Market Cipher B so that we can see the overall direction of the market. And if you just draw on Market Cipher B, it becomes a predictive tool where you can just kind of tell where the market is going to move based on outlining these waves. Look at this. As soon as we start to draw on Market Cipher B and it starts to come down as a whole entity, I'm not just looking at individual dots. As soon as Market Cipher B starts to come down as a whole entity, where the green waves on the bottom are getting lower and lower and the red waves on the top are getting shorter and shorter, this is when we start to come down. This is when price starts to come down, right? We're actually forming a bearish divergence right here on the 4-hour chart where price is coming up and Market Cipher B is starting to angle down, and then we have this big drop here, okay? So anchor waves and trigger waves, don't worry about the size of the wave and where they print. Yes, that's important, but it's the general direction of the market that allows you to tell what's an anchor wave and what's a trigger wave. I'm sorry if this is too much detail, but I just want to be as clear as possible. Another thing is, if the money flow is in the red on the 4-hour and we get a wave that confirms below the 60 with a big green dot, this is an extremely powerful anchor wave signal telling us, okay, we've hit a bottom, it's time to really start looking for a long position. So when the money flows in the red on the 4-hour, we're looking for a long position. And according to my strategy, I know people have different strategies, but I start looking for a long position when money flow is in the red. I don't start to enter a long position until money flow on the 4-hour has curved into the green, or is clearly curving into the green, where we can see the direction of Market Cipher B starting to curve up into the green. Now, I use purple and blue for my money flow right here, as you can see, but for most people it's red and green. So if we see a 4-hour trigger wave right here where the money flow index is in the green. Okay? It's in the green. It's just crossed over into the green. This is our first confirmation. Our second confirmation is that the 4-hour Wolfpack ID has crossed over the 0 line and has changed color. Now, the Wolfpack ID, this is my secondary confirmation indicator, okay? I use this thing to keep me out of bad trades, and it's not the same as the VWAP like a lot of people are saying. It's not the same as the VWAP. It looks very similar, but a lot of times you will see, like right here, the VWAP crosses under the 0 line, but the Wolfpack ID is above the 0 line, okay? They're not the same thing. So you can get this indicator for free in Market Cipher. Just search for it up by indicators. And after you get a trigger wave on the 4-hour, you're going to make sure that the Wolfpack ID has crossed over the 0 line. Let me zoom in here so that you guys can see clearly. The Wolfpack ID has crossed over the 0 line and has changed from red to green, or in my case, purple to blue. So right here, I see my green trigger wave is lined up perfectly with the Wolfpack ID. It's changed from red to green, or purple to blue. Now that I have this on the 4-hour time frame, I am going to start looking for an entry on the 24-minute time frame. So you're going to find these confirmations in order. You're going to do the 4-hour green dot, the 4-hour Wolfpack ID. Once these two things happen, you're going to say, okay, time to pull up my 24-minute chart. So now on the 24-minute chart, we're going to go back. Where was this? This was January 31st. Okay, that was a great trade. So let's go back to January 31st on the 24-minute chart, and we are going to look for 3 very specific things, and we will not enter a trade unless these 3 specific things are met. Okay, here we are. This is our 4-hour trigger wave right here, and if you look at my screen, you can see where my cursor is on both time frames at the same time by the vertical dotted line. Now that we have printed this confirmation on the 4-hour, we're going to look for a confirmation on the 24-minute. Okay, and what we're going to look for is we're going to look for an anchor wave on the 24-minute, preferably something like this where we see these big green dots and the money flow is in the red. And we've formed we've formed this clear bottom right here. Okay, this is the first thing we're looking for. We want to see the big green dots. We want to see the wave coming below the -60 line, and we want to see the money flow in the red. Then what we're going to wait for before we even enter a trade is we are waiting for a trigger wave, which would be a green dot that prints after this bottom right here. And then we are waiting for the money flow index to cross into the green. And then we are waiting for the Wolfpack ID to cross from the below the 0 line to above the 0 line and change from red to green. Now the first time that happens is right here. Okay, this is the first time that all 5 of these confirmations are met, right here. So we would have entered our trade right here, okay? And whoops, that's where we would have entered our trade. Now, if we zoom out, we can see that this would have been a very good trade for us. I mean, we could have stayed in this trade pretty much the entire month of February. And you know, that's what a lot of people did. I was in a trade, a long position for pretty much the whole month of February, and I also took a lot of other smaller trades. This strategy can be used to make long-term trades that you're in for a number of weeks, and it can be used to make shorter-term trades that you're in for 12 hours. This is not a scalping strategy, in case you haven't noticed. I'm sure you have. So these are the 5 things that you are looking for. Okay, I hope that makes sense. Now I want to answer some questions that a lot of people have been asking me. Let's talk about stop losses and take profit levels. When it comes to stop losses and take profit levels, I find it's best to set your stop loss under the last swing low. And here's what I mean by that. A swing low is basically the last low that the chart printed before you entered your trade. So I entered a trade right here, which means I would have put my stop loss all the way down here. I would have given myself a lot of of breathing room, right? Because I'm entering a long-term trade and I know price is very volatile and I can see that the momentum is moving up and I'm very confident based on my confirmations that we're going to move up. But you know how the crypto markets are, guys, where we have these crazy wicks down. And because I'm entering a long-term trade, I want to give it some breathing room. So I would actually put my stop loss right here. Now this is a significant stop loss, guys. This is an 11% stop loss. So if you're using leverage, you need to make sure that you're not over leveraging yourself, that you give yourself enough playing room. If you plan to stay in this trade for a long time, give yourself enough playing room. Now, when it comes to take profit levels, here's what I do, guys. I open up Market Cipher A and I turn on ribbon number 5. Go to Style, make sure ribbon number 5 only is checked. Now, what ribbon number 5 does, and this is an amazing tool, it's basically a 21 EMA. That's what it is. It's a 21 exponential moving average, which is giving us the average price of Bitcoin for the last 21 4-hour candlesticks. When this thing turns white, that signifies that we have exited our bear trend, our downward trend, and have entered an upward trend. It's a very bullish sign when the EMA ribbon 5 on Market Cipher A turns white. Another confirmation, if you need another confirmation and have 6 confirmations, you can make sure that the EMA, if you're looking for a long, is white when you are entering a long and gray when you are entering a short. Okay, that's another great confirmation. What I do every time we print another swing low, right? So we had this Elon Musk, he changed his Twitter and then we came back down, right? We came back down, but we printed a low that was still much higher than our last swing low. So I would then move my stop loss underneath this previous swing low. And every time we come back down and we print another low, like right here, right? I would move my stop loss right here. Now, something I will never do is move my stop loss above the 21 EMA or ribbon 5 on Market Cipher A. And the reason for that is because this EMA line is acting as a dynamic support. And when I say a dynamic support, for those who are unfamiliar with the terminology, a support in trading is an area where price has trouble breaking down below. Think of it as a floor that keeps price from going below a certain level. The reason it's dynamic is because it is moving along with the price. And if we look at price as it moves up this uptrend, every time it hits this 21 EMA, what does it do? It bounces back up off of it. So I just will keep moving my stop loss underneath the last swing low, making sure it stays under that 21 EMA. And what's happening now is, guys, I've moved my stop loss into profit, meaning I entered my trade right here. I entered my trade right here. And, we'll talk about take profit later. But originally, my stop loss was down here under this swing low. So originally, I would have been at a 12% loss if I had lost this trade. But now, my stop loss has moved into profit, which means even if this trade gets stopped out, I'm still guaranteed to make 11%, almost 12% profit, even if the trade gets stopped out. So this is how I deal with my stop loss to make sure I don't lose my trade. I constantly move that stop loss upwards. And then I would move it here, and then I would move it here, and then I would move it here. And eventually, guys, after this, I moved it to right under here, after this wick down, and then I got stopped out right around this candle right here at about 52,000. Now, let's talk about taking profits and when to exit a trade. The way I trade, and this is just my style, guys. I'm not saying that this is the way to trade. This is what I do. I look at Market Cipher A, and I like to take profits whenever we print some of these red diamonds. Okay? If we print a red diamond, I might take some profit out. So if we enter a trade, let's say we put $1,000 into a trade, right here, where we entered, we print this red diamond here at 12%, or we print this diamond here at 25%. I might take $200 out of that trade, right? I take $200 out of that trade, and then I'm moving my stop loss up. So the whole way, all the way up this trend, I'm taking money out, I'm securing my profits, I'm moving my stop loss to make sure that it's a risk-free trade. And every time you hit one of these red diamonds, just take a little bit of profit out. Just take a little bit out. Take a little bit out. Always leave some in there because we don't know how far this is going to go, right? This is uncharted territory. These are all-time highs. But just take a little profit out. When I first started to learn how to trade, it was all about setting targets. And I quickly learned that setting targets is not a good way for me to trade, because if my target doesn't get hit, then I could end up taking what could have been an $800 win into a $200 loss. That's not the way I like to trade. I like to secure my profit. Nobody ever went broke taking profit. Even if it's not the most you could have made in the trade, it's still better than a loss. So that's how I exit. Now, I'm not just looking at these red diamonds, guys. I'm looking at Market Cipher B. I'm looking at Market Cipher B as well. If we start to print something, like this, let's be real here. We kind of saw, a little bearish divergence here, right? Price kept going up, and the momentum on Market Cipher B was starting to come down. So, keep that in mind. It doesn't mean that you need to run out of the trade. It just look at Market Cipher B on different time frames. Take these things into account. And if you do see this printing, maybe you would have taken a little bit of profit on these diamonds and just let the rest run to see what would have happened. I mean, obviously we had another huge run up, and then we had a very blatant bearish divergence right here where price, went way up, and very clearly, right here we had this massive tick down on Market Cipher B before the drop. So if you see things starting to look bad on the 4-hour, you can get out of the trade altogether. Now, what are some things to look for when you're looking to get out of a trade? Well, one thing is if this moving average turns gray from white, okay, it's really time to get out. Another thing is this: when we're looking at Market Cipher B on multiple time frames, obviously we're looking at the 4-hour and the 24-minute. But if you see trigger waves starting to form lower on Market Cipher B, like in all this time here, we did not print a trigger wave below the 0 line, right? This means there's tons of momentum moving upwards. If you see that, we're starting to print, we're starting to curve down, and this wave is coming down below the 0 line after it hasn't for a number of weeks, that's a sign that Market Cipher B is telling us the market is going to move down, because remember, it's giving us a visual. It's giving us a great visual of how the market moves. We can see it come up, and then we can see it come down. Then we can see it come up, then we can see it come down. And it's a predictive thing. Look, guys, once it starts to curve down like this, it's telling us to get out. If we could have gotten out as soon as we saw it start to curve down, and we could have saved ourselves, a good old 18% if we listen to what Market Cipher B was telling us. And you can do this on other time frames too. Do it on the 24-minute. Do it on even the 15-minute. I mean, it depends on how much time you have, but really, I find it works great to just do this on the 4-hour and the 24-minute. Okay, so that's take profit, stop loss. Let's talk about this. People ask me all the time, do I need to wait for the 4-hour to confirm before I start looking for a 24-minute entry? Now, guys, let me just say this, okay? There's the strategy right here, these 5 confirmations. If you're following the strategy exactly as it is laid out, you should wait for the 4-hour to confirm everything before you look for an entry on the 24-minute. However, I don't always do that. I don't. I'm going to be honest with you guys. A lot of times, if I see a trigger wave forming on the 4-hour, even if we still have 2.5 hours left before the candle closes, personally, I oftentimes will start to look for an entry because I can tell that momentum is moving upward. However, I don't necessarily recommend that to people who are new, because you want to make sure that you understand what you're looking for. You want to make sure that you're confident that momentum is moving in your direction. And if you do wait for the 4-hour to confirm, especially if you're new, you can be more certain that momentum is moving in your favor, okay? I just want to make that very clear. Now, people ask me, Jason, CryptoFace says, we're looking to long when money flow is in the red. We're looking to short when money flow is in the green. And yes, but the key word is we are looking. Now, I'm not putting words in CryptoFace's mouth because personally, this is how I interpret what he says. When I see a red money flow index, I am looking to enter a long because I know as soon as this money flow curves from the red to the green, which happened right here, as soon as this money flow index curved, this is the point where we ended this long period of consolidation and you know, where price was trading sideways and slightly moving downward. That's right where we ended that period and started this huge uptrend. So when I see money flow in the red, I get excited because I know there's going to be an opportunity in the future to enter a really great long. Okay, so I'm looking to long when money flow is in the red, but I am longing when money flow is in the green. Another thing to keep in mind, guys, just because the money flow is in the red does not mean we cannot long. It also doesn't mean we cannot use this strategy. You can do so many variations on this strategy. For example, today we printed an anchor wave. The Wolfpack ID was in the purple, but if we come over to the 24-minute chart, you know, we can see that we got a whole bunch of these nice anchor waves. We had the money flow in the red, and then we got this really nice trigger wave right here where money flow crossed over into the green. And look, you know, we could have entered this really nice little position right here, right? You could have also said, okay, we got a green anchor wave on the 4-hour, and then we had a green anchor wave on the 24-minute, and then another little trigger right here. You could have entered here and made a nice, you know, 11, 12%. So there's a lot of variations. This is why I encourage you guys not to just, if you're new, start out by doing exactly what this says. Once you get more experienced, go and back test these things and start to tweak little things and say, okay, I'm going to back test this strategy if I don't wait for the 4-hour to confirm. It's kind of hard to do because, you know, it's hard to know when exactly the 4-hour confirmed in hindsight. Or test the strategy and say, okay, I'm going to test this strategy if we just get an anchor wave on the 4-hour, not a trigger wave. I'm going to test it if we only print an anchor wave only and see what happens. And go back and keep track of all the trades you would have made. Get a little notebook or a spreadsheet, and let's say you back test this for the last 25 times it happened, the last 100 times it happened. Then calculate how many times would I have won, how many times would I have lost. If you would have won 7 out of 10 trades, then you know, okay, this strategy is going to win me 7 out of 10 trades. That's pretty great, isn't that? Let's talk about Heiken Ashi candles versus regular candles. Heiken Ashi candles and regular candles will cause the Market Cipher beat to print signals at different times. It will cause signals to print at different times. If I turn on Heiken Ashi candles right here, it's kind of hard to tell actually what happened, but these green dots and red dots will move because of the Heiken Ashi candles, because this is calculating price in different ways, kind of giving you an average so that you can see the trend more clearly. This is something that I encourage people to experiment with and backtest, but for me, I find it to be best when I use regular candles on the 4-hour and Heiken Ashi candles on the 24-minute. This is what I prefer to use. I can't say that I've actually tested and seen a difference in the profit I would have made. I have not taken the time to do that. The reason I prefer to use these types of candles is because I come from studying technical analysis using regular candles, and it really freaks me out to use the Heiken Ashi candles when I'm analyzing the 4-hour time frame. I like to use the Heiken Ashi candles on the 24-minute time frame because it really helps me see the trend very well. Like right here, we can tell with the Heiken Ashi candles when they start printing dojis, and if somebody doesn't know what a doji is, it means the candle has a very long wick like this and a very small body like this. Okay? When Heiken Ashi candles start printing these dojis, that signifies an end or a change in the trend. And so, if we zoom in right here, we can see, okay, we entered right here on this doji, signifying the changing of this downtrend into an uptrend. And, you know, we could have exited up here when we saw these dojis starting to form, or this doji starting to form. Of course, we'd use other indications to exit. I'm just giving you an example. It helps me see the trend so I don't freak out if I see this giant purple candlestick coming down, which can happen a lot if you're using regular candles. You know, and you're in a trade, and all of a sudden you start seeing this purple candle come down, you're going to freak out. You're like, uh-oh, I better get out of here, right? You're printing a red dot on the Market Cipher B, and you see this giant purple candle coming. But if you put on the Heiken and She candles, you don't see that. You don't see that red candlestick. You still know, no, it's okay. We're still in an uptrend. Is there anything else I want to talk about? Guys, make sure to experiment and backtest. So this strategy that I just laid out for you, it works in and of itself. And I recommend it for people who are new because it has 5 things that you look for. There's no second guessing. There's no FOMO entering or exiting. You're like, okay, I know what I'm looking for. All the pressure's off. Whew. I'm not going to enter a trade unless these 5 things happen. And it's nice to be able to have something like that as a starting point, especially if you're new. If you've been doing this for a while, right, and you're comfortable with swing trading and you have more knowledge of technical analysis, right? I mean, really, this is a great strategy to use, but if you have some basic technical analysis skills, it will allow you to enter more trades using variations of this. You know, backtest, experiment and backtest this strategy, right? We could have made a really nice trade this morning right here, entering on a trigger wave, and also back here we could have made, you know, a nice trade entering on an anchor wave. I'm sorry, not a trigger wave. And you know, you can look to enter shorter term trades in here, shorter longs and shorter shorts, you know, using variations of this same strategy. But really, this strategy right here is meant for longer term swing trades where you're in them for like at least 12 hours, you know, probably even a few days, up to a few weeks in this bull market. Also, guys, the opposite of this strategy will work for shorting, okay? So if you see an anchor wave in the red, on a red dot anchor wave, and a red dot trigger wave, you know, and then you come over to Market Cipher B and you see the wolf pack cross over into the purple, and then you come to 24-minute chart and you see a red anchor wave, a red trigger wave, and the wolf pack crosses into the purple. You know, you could short that, and just be careful, guys, shorting. Like I said, you don't want to end up with your shorts around your ankles. But, you know, and especially right here on the 24-minute, when we had this on the 4-hour, when we had this trigger wave, this red trigger wave, the money flow was in the red, the Wolfpack ID was in the red. You know, we could have entered right here, and that would have been a nice short position. Okay, and even still in that short position, we could see it clear. The money flow index on the 24-minute was crossing into the red. We did have a slight, you know, downward momentum, and then right here, this red trigger wave would have been my entry signal to enter a short. So I hope this makes sense, guys. Again, if you don't have Market Cipher, you can click the link in the description of this video. And guys, if you are interested, I am offering a trading course that goes over everything, basically from A to Z, as far as trading goes. This is the outline of the course. I'm going to go over everything from if you've never looked at a trading chart before, all the way up to showing you how to create your own successful strategy. How I'm going to give you example strategies that you can use to start with. We're going to talk about risk management. We're going to go over everything you need to know to be a successful trader. This is exclusively for 50 people. It's going to be a small group where I'm going to have in the Discord 50 people. We're going to do an hour-long session. We're going to do half-hour Q&A where you can actually talk to me and ask real questions in real time, and I will answer. It's basically, you can email me for more information if you're interested in that, but it's basically going to be $300 of either Bitcoin or Cardano. And it's first come, first serve. So I still have about 30 slots open so far. If you're interested in this, it's going to be every Monday, Tuesday, and Thursday from 2 p.m. Eastern Time to 3:30 p.m. Eastern Time. What I need from you is I need you to send me a payment, and then I need you to send me your Discord name so that I can add you to the private Discord group. I'm really looking forward to this because I think, you know, it can help a lot of people, especially who are new. And you know, if you're not interested in this, you know, don't worry. Oh, here we are on the Market Cipher site. Don't worry, because I'm going to be providing a lot of more free content on my channel, a lot of technical analysis content. I'm going to be talking about my scalping strategy, but I really wanted to make this video to help those who have questions. So thank you guys, and I'll see you in the next video.